Trump's tariff inflation is finally here. The most recent PPI inflation report just came out and it was bad. Now look, this is important for you, okay? This directly affects your wallet. So it's gonna be a little bit of a longer video, but this matters. So the PPI is the producer price index, and it is widely considered a leading indicator to the CPI, which is the one that affects you directly. That is the consumer price index. The PPI, as it says in the name, is how much producers and businesses pay for raw materials, imported materials, not finished products. So because of this, if this goes up, it foreshadows an increase in CPI, because when company costs go up, they pass that on to the consumer. Now the numbers were not good, okay? The PPI came in at 0.9%, okay? It was estimated to be 0.2%. So more than 3 times higher than the estimate, okay? Then you have the core number, core PPI, very similar to core CPI. This removes energy prices and food prices, okay? The core PPI came in, ding, 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 at 0.9%, still with an estimate of 0.3%. So 3 times higher than the estimate. And then even if you take core PPI and remove trade services on top of that, it still came in at 0.6%. Now, let me give you for reference, okay? The PPI number, this is the highest since June of 2022. This is when we were in the middle of our massive inflation, okay? And then the core PPI number, this is the highest since March of 2022. Again, when we were in the middle of our massive inflation period. So what does all this mean? It means that this is going to foreshadow an increase in the CPI. It means that this directly shows that what is the reason for this increase? It's tariffs. It's tariffs, which bothers me because it means it was completely avoidable. This did not have to happen. Tariffs were self-inflicted, and it's finally showing up in the PPI. And the one last thing I want to end this video on, this also just made the Federal Reserve's job much more difficult again. Yesterday, their job was easy. Bad jobs numbers, good CPI number, lower interest rates. Now it's bad jobs numbers, but also bad PPI, which might show up as CPI at some point in the future, which means that stagflation is still on the table. I'll keep you updated as best as I can. This isn't good.
The latest inflation data just came in hotter than expected and above 100% of forecasts from Bloomberg economists. No one got it right. Wholesale prices measured by the producer price index jumped 0.9% in July, above estimates for 0.2%. That is the biggest spike since 2022, and the core reading also came in hot. It showed that everything from portfolio management fees to airline prices and equipment costs were up. This is a reversal from just a month ago when PPI came in below 100% of Bloomberg economists' forecast. This is also the first PPI report since the Bureau of Labor Statistics made recent budget cuts to its process, and the first one since President Trump fired the head of the Bureau and nominated a new BLS chief. But none of this is likely to change policy, and markets still see 95% odds for a September rate cut. That is worth paying attention to, because if the Fed cuts even with inflation still sticky, it means they think something else in the economy is about to break.
Hi everyone. So retail sales came in for July and the market did not really respond. Here's what my thoughts are on it. So retail sales rose by 0.5% in July, which was slightly below the 0.6% expected. This was largely touted as indicating that consumer spending in July was resilient. But within this, food and drinking establishment sales fell by 0.4%, and building and garden supplies fell by a whopping 1%. So my 2 cents is that this demonstrates the trade-offs that people are making in their day-to-day lives, so they are only spending on essentials and not things that are extravagant. And also in today was the consumer sentiment survey out of the University of Michigan, and that fell to 58.6 this month. And this is down from 61.7 in July and lower than the 61.9 expected. And this largely stems from consumers saying that they expect inflation to increase. So my 2 cents is, even though the hard data suggests that everything's fine with retail spending, that data is quite lagged, and the newer information, the soft data from the consumer sentiment survey, is likely more indicative of what we can expect in the months to come. Let me know your thoughts.
It's all I've ever done, so if you ever have the thought that crosses my mind where maybe it's not financially viable, of course that's stressful. Whenever there's an issue like that with one of the main importers of canola, it's obviously going to have an effect on the price, which then in turn affects us. Because when we grow a crop like this, that's expensive to grow, and we've got it to a point where we have the maximum amount of dollars put into this crop, and then an announcement like that just essentially dropped 50 cents a bushel right off the top. Yeah. Right with that announcement, and who knows what it'll do over the next month or two, or however long this lasts. The timing was essentially the worst time for us. Canola was a decent price. We've pre-sold a little bit, but not a whole lot, because we didn't want to overextend ourselves. Essentially, we wanted to wait until we saw what type of crop we had. So we're not as protected as I would have hoped, but we didn't necessarily see this coming. So how do you protect against something that you don't know is about to happen, type of thing? It requires a lot of fertilizer. Fertilizer prices are higher. The tariffs have an effect on them. The seed's expensive. The chemical to make sure the field stays essentially weed and pest free is expensive. Machinery is expensive. Just essentially our costs across the board have increased rapidly in the last 5 years, and the price of canola is not kept in step with that. And then add U.S. tariff pressure and now the Chinese tariff pressure, it's a downward trend on the price and an upward trend on the costs, and it's essentially not a great situation. Like, just for instance, urea prices today are $800 a ton, and not that long ago I paid $350 a ton. So when your fertilizer price doubles, and the price of canola at that time was probably $11 or $12, and now today it's $13.50, $14. So fertilizer's doubled, and canola's gone up, call it 20% since then. The cost line and the revenue line are starting to match, and that's not great for longevity. You're concerned about, will you have enough money to operate in the future? Yeah, it's like every other small business. When the revenue and the expenses are starting to amount to about the same, it makes everything more difficult. And when you add difficulty in a business that you're into as deep as we are into farming, of course it's stressful.
Your prices are about to jump because inflation just did. The producer price inflation spiked to 3.7% year over year. Experts expected 2.9%. Last month, just 2.6%. That's the biggest jump since March 2022. And here's the part you don't want to miss. Core PPI, which is stripping out food and energy, had its fastest climb since April of 2021. Wholesale prices in July alone jumped 0.9%, driven mostly by service sector costs. Trump once promised his tariffs would make foreigners pay and prices here would drop. But the reality? Prices are climbing, not falling. When policy is built on slogans instead of economics, it's everyday Americans who get stuck with the bill. So tell me, how long before this inflation spike shows up on your grocery receipt? Or has it already?
Tariff inflation is here, and it showed up strong, so let's review. Today we got a huge jump in wholesale inflation, which measures the cost of goods and services purchased directly from producers. Economists were expecting a 0.2% month-over-month change, but instead we got 0.9% month-over-month. Take a quick look at some of the categories that had the biggest price increases. These are food, wholesale electronics, and some of the financial industry. This is definitely not good news for the September rate cut situation. We're still likely to get a 25 basis point cut, but the 50 basis point cut is probably not going to happen. Again, this is because inflation is now going the wrong way. I really like this point from Stephen Sanley at Santander. He says that there is more coming in terms of tariff-related price increases. I think he's absolutely right. I think it's just now starting to show up in the data. My microphone died, so we're going without. Markets were okay today. They started off in the red, as you can see right here, but we actually recovered some ground towards the end of the day. Some earnings and company news. Tesla launched their robo-taxis in New York City. Their stock was down about 1% today.
Interesting news surrounding Intel. If you'll remember last week, Trump called for the CEO to step down because of his past ties to China. But it looks like now he's looking to actually get a stake in this American company to try and boost and bolster American manufacturing of chips. This is in line with Trump's recent unprecedented actions. For example, he has a golden ticket for Nippon Steel to be able to sway the steel company. He also is forcing NVIDIA and AMD to give 15% of their revenues from China back to him. And now he wants a stake in Intel. Very interesting. We will definitely be seeing more of these interesting deals in the future. So just like we expected, tariff-induced inflation is starting to show up in the data. There will be more to come. I don't think this is the end. I think as tariffs get set in stone and they start to seep into the economies, this will show up even more prevalently in the future. So that's something to watch out for and follow for more market updates. I will have my microphone charged next time.
Trump's tariffs will cause inflation and it'll ruin the American economy. I've heard so many people say this, and the funny part about it is maybe 5% of people actually understand how the tariffs would work, how no income tax would work. But good for us, we have a president we can look back on that actually did this. This actually existed in U.S. history. No one can deny this. It is real. Grover Cleveland in the late 1800s, he served 2 terms as president, and he did not have any income tax, and he used tariffs to fund the government. The funny thing about this guy being president is it's one of the only times in American history when the government, not only did they not have debt, but they had a surplus of money. So the government was not taxing its people. It was using tariffs to fund the government, and they had a surplus. Right now, we have $35 trillion in debt. If we were a normal company, we would have went bankrupt a long time ago. Inflation, you ask? Well, inflation has been running rampant the past couple of years, but inflation then, it ticked up above 0% a couple times during his presidency, but during his 2 terms, he averaged -1 to -2% inflation. You can't deny what happened. What Trump's talking about is not something crazy. It's actually worked, and it was one of the last times the American people were not sitting here in...
Well, it's finally here. Trump's tariffs go into effect tomorrow. 25% on Canada, 25% on Mexico. So all goods coming into the U.S. from either country will increase in price to us by 25%. So for all the people who voted in this administration to lower the cost of groceries, you're going to be in for a rude awakening tomorrow when you're paying a lot more. Your bag of avocados that used to cost $8 is now $10. Your shampoo and conditioner set that was $20, now it's $25. This is going to significantly impact lower and middle class America. And this is just the beginning on these tariffs. As Trump has said, it may get a lot worse before it gets better. His own words. Regretting that vote yet?
All right, let's put on our thinking caps here, because if something sounds a little too good to be true or sounds a little exaggerated, like Trump is tariffing penguins, it's probably because it is. Trump did not put tariffs on Heard and McDonald Islands because he wanted to punish the penguins. He put tariffs on those islands because Australia might have been trying to do a little bit of backdoor trading. Did you guys even know that we have received steel products from Europe that have labels on them that say they are from Heard and McDonald Islands? See, what Australia has been doing is they have been manufacturing products and claiming that they were made on Heard and McDonald Islands because those islands don't have tariffs. Then they can export from those islands, supposedly, send them to another country with even lower tariffs than Australia has, and now they are able to charge you more while spending less to ship them to you. What Trump is doing with these tariffs is he is saying not only are you not going to rip us off anymore, but you are not going to be able to have access to these little backdoor deals that allow you to save money on Americans' dimes. I actually saw another girl talk about this, and I'm going to tag her below because her video was fantastic. Like, at some point, you guys have got to realize that your blind hate for Trump is making you accept realities like Trump is tariffing penguins and assuming that that could be true. Sorry, my light died, so I had to come outside. But seriously, you guys, if you want to be anti-Trump, like, that is your right as an American, okay? You cannot like the person that is your president right now. You can be upset that your candidate did not win and is not in the presidency. But if you're going to take that stance, at least have valid reasons. At least have information to back up what you are saying as to why you hate him.
Economic forecast is in. It's not looking great for the American consumer. In July, costs for producers and manufacturers, known as wholesale inflation, rose at the fastest monthly pace since June of 2022, when we were in the pandemic. According to the Bureau of Labor Statistics, the producer price index, which measures inflation before it hits consumers, jumped 0.9% from June to July. That's the biggest monthly jump in over 3 years. It's more than 4 times what economists expected. Now, higher prices may be hitting American consumers next. So far, consumer prices have been relatively steady. Now, this is partly due to U.S. importers bearing the brunt of some of these costs, even taking steps to offset the impact by pre-ordering inventory and absorbing some of the tariffs to shield consumers. But unfortunately, that buffer between the tariffs and your wallet may not last. Let's take a step back and break this all down. There are 2 kinds of inflation that we measure on a monthly basis. Retail inflation, which is what you, the consumer, feels, and wholesale inflation. Wholesale inflation is the change in prices that businesses pay for goods. So manufacturers, producers, and business owners tend to feel wholesale inflation first before the goods even get into your hands. Costs go up for them, and then they're forced to make some pretty tough decisions. Do they and can they pass the price hike on to you as the consumer? Do they or can they squeeze their suppliers and manufacturers? In almost all cases, the impact eventually makes it to the checkout line, causing you to pay higher retail prices. But President Trump doesn't seem to believe there's any cause to worry.
We had the worst inflation in the history of our country. And now our inflation is down to a perfect number, a beautiful number, hardly any at all. And yet our country is taking in tens of billions of dollars and trillions of dollars, actually trillions of dollars,